Hey, it's Sasha Evdokov, and welcome to TradersFly.com, where I share with you some insight about trading, investing, and the stock market. Now, in this week's video, what I'd like to do is just quickly shoot off some 10 pros and cons of paper trading. So we're going to go through 5 pros and 5 cons of paper trading. Now, of course, there are going to be many more pros and cons, depending on how deep you go into the subject matter. But just to give you some insight, some things to think about paper trading. If you're just getting started, maybe this will give you some guidance of when you should or when you shouldn't paper trade. To get things started, we're going to go through the 5 pros. And the first pro is really, you don't have to risk your own money. Now, if you don't have to risk your own money, you can do whatever you want. You can get in thousands of shares, you can get out of thousands of shares, you can put on weird and wacky positions that you have no clue about, or just get used to the panel. So that's really a great feeling, is when you don't have to risk real cash or real capital. It allows you to just experiment with things and just get the hang of things. So not having to risk real money is one of the first advantages of paper trading. The second advantage is that you can trade stress-free. Because you're not risking your own real hard-earned money or capital, you can go ahead and play around and dabble around and execute and make trades without that emotion killing you, without going to bed and not being able to sleep. So you don't have to worry about losing any money, and because of that, your emotions should be nice and level. There's a lot of people out there that when they trade stressfully. They trade with a lot of stress and baggage. And when you paper trade, fortunately, because it's not real money, you don't have all that weight pulling on you because, again, it's not real money. So you're able to trade naturally without worrying about the loss of capital. And this allows you to make judgments and decisions clear-minded and allows you to really practice appropriately if you're just getting started in the market. So moving on to the advantage number 3, it really does allow you to get comfortable, but not only comfortable in your trading, it allows you to get comfortable with your platform. So if you're starting out with a new platform, if the tools are a little more confusing, it allows you to get comfortable with it. It allows you to play around and click on things to see what does what, how things work, how things function, to see if you're comfortable with that panel. Because not everyone is going to be as tech savvy as Bill Gates or Mark Zuckerberg. So you're going to need to play around with the panel and get the feel of how things work in a trading platform. Because it's a lot different. Just like driving a car when you're first getting started, driving a stick shift or a manual takes time to get the hang of it. So the same thing in a trading platform. There's a lot of knobs, widgets, and little tools and things that you can click. And if you click the wrong things, it can cost you a lot of money if you're trading in real money or a real capital account. So with paper trading, it removes all that risks and allows you to trade fake money, paper money. It allows you to get used to that trading platform. Advantage number 4 is that it allows you to build confidence. So this one ties into the stress factor. So because you're trading without any stress, it also allows you to build some of that confidence. So as you start making some profitable paper trades, it allows you to build some of that confidence. And the more confident that you feel about trading, the more clear-minded that you feel. And when you're clear-minded, when you're relaxed, it's like playing a sport. When you're relaxed, you're able to be in the zone. You're able to trade in the zone. And you're able to make things as good as you normally would trade. So as you build that confidence, it allows you to trade stress-free, and there allows you to continue to make better and better trades for the future. And the 5th pro advantage or benefit to paper trading, and one of my favorite reasons why I like paper trading certain situations, is that it allows you to test strategies, systems, and see the probability of success. So let's say you found a new tool, a new technique, a new strategy, or you want to test something out. If you paper trade that strategy or that technique or that system, it allows you to see the percentage of success. And that's really what I like using the paper trading functionality for. So for example, maybe you're already trading successfully and you're trading, let's just say, basic stock. And if you're trading basic stock and you're doing just fine and you want to add another strategy, let's say you want to move to options and you want to go ahead and trade some options, when you start paper trading options, it allows you to see, okay, will these strategies work as well for a real account? And if they do, you can go ahead and now add this additional strategy to your real trading account. So now you can trade stocks and you can trade options, and then you continue this process. As you learn a new strategy or a new technique or a new system, you can go ahead and add those to the buckets of already successful techniques that you have. But just starting with one is a great point, and that's all you really need. But if you continue to add and build upon that, really using paper money and paper trading allows you to see the percentage of success and allows you to test out those strategies without any risk. Now let's get to the cons or the disadvantages of paper trading. Probably not one that we want to talk about, but we need to know and understand. So the first disadvantage is that the market conditions are not necessarily always real. Sometimes paper trading is going to be delayed or behind, maybe 15 minutes, or maybe it'll be an hour delayed or 1 day delayed. Even if you have real time with your paper trading account or software, or you're using just pen and paper to record your trades, your still market conditions are not the same because they also affect you. And when they affect you, this also impacts your stress, it impacts your emotions. So the conditions overall aren't going to be the same when you're trading paper money as you are with real money. See, when it comes to real money, that stress factor that we talked about earlier in the advantages that you're trading without that stress is really important to learn to deal with. It's those emotions. It's learning how to control your emotions and being disciplined in your trades. That's really one of the things that you really need to learn in trading. Most people aren't going to be honest with their emotions, with their behavior. If I'm a constantly late person, if I'm constantly not meeting what I say to my friends, most people don't want to admit to these things. And in trading, if you don't do that, you're going to get burned out. So if you're not trading and learning about your emotions, that's going to be really bad for your trading account. That is one of the main disadvantages to paper trading, is that you don't get those real life situations of learning how to deal with the losses, learning how to deal with the stress or the emotions. It's not necessarily going to be extremely stressful, but you still have to learn how to deal with those emotions of euphoria or overexcitement or just a really happy state of mind, or some of those times where those trades don't work out in your favor and you have to take a loss. And unfortunately, with paper money, you don't get that one-to-one relationship or that feeling as much as you do with a real account, because when real money is on the line, you're more connected to it. The second disadvantage is your own personal trades don't impact the market when you're paper trading. So for example, remember that trades typically trade on volume. And if a stock is trading 100,000 shares per day and it's a $5 stock, if you're putting in, let's say, $50,000 or $100,000 or $200,000 into that trade, and it trades very lightly, you're going to move that stock. You're going to move that stock to the upside, or when you sell it, you're going to move it to the downside. So your impact in the market isn't accounted for when you're paper trading. And this can be really dangerous and gives you a false sense of hope if you're trading those stocks that are less liquid when you're paper trading. So make sure you're trading liquid stocks. Make sure that you're trading stocks that actually will be very similar to the conditions that you expect with a real account when you're paper trading. Slippage and commissions is the third issue, or the third disadvantage when it comes to paper trading. Now sometimes you just can't get filled at certain prices. Not to mention, paper trading sometimes doesn't account for commissions. If they do, then by all means that's great. But sometimes you'll get that slippage cost. You'll have those additional little costs that you have to deal with, whether that's even having a broker minimum, that you have to hit minimum rates or fees within your broker that you have to pay for. And if you don't hit that, you have to pay for that. And that's all part of the trading as a business part. You have to think about all these things. And a lot of times with just paper trading, it just gives you a little narrow view of this. And you don't take into account all the other factors, such as minimum trading requirements, minimum amount of trades that you have to do, the commissions or the slippage costs because you can't get in the trade, or you can't get out of the trade, or you miss the trade. So all these little things can come up. The fourth disadvantage or con is missing out on future profit potential. So for example, let's just say you went ahead and you traded 1,000 shares of a certain stock, and that stock exploded $20. Now you could have made $20,000 on that trade, but if you were trading with paper money, unfortunately, you wouldn't have made that $20,000. So those missed opportunities or opportunities that you could have had and made real money from are not going to happen if you're paper trading. So that's another disadvantage, but that's part of the learning process. Just think of it as part of the learning part, and remember that there's always another trade. Just remember the word next. Go on to the next trade, move on, make another trade. And the fifth disadvantage or con regarding paper trading is picking weak stocks to trade or not healthy opportunities. You tend to get sloppy, so kind of tying it into the emotion factor, you're looking to do a trade just to do a trade because it's not real money, the conditions are not real, it's paper money. So when you're looking to just do a trade just to do a trade, maybe it allows you to learn about the platform, maybe it allows you to learn about execution, but when you're just doing a trade, the conditions aren't real, but now you're getting sloppy. You're choosing weak stocks or you're choosing weak entries and exit points. You're looking to just do the buy order and the sell order. But remember, trading isn't just hitting the mouse or hitting a key on the keyboard. It isn't just placing that order, and it isn't just exiting that order, because that's what most people think about when it comes to trading. They think they need to constantly be putting an order in, when in fact, a lot of trading is about being disciplined to stick into that trade, to stay in that trade, and continue waiting and riding that stock to the upside, or being disciplined, waiting for your entry point or exit point. So those kinds of things you need to also be aware of when you're paper trading. In the end, the big question is, should you paper trade? Well, the answer to that is, if you're just brand new, you're just getting started, it's probably a good idea because it'll familiarize you with the trading platform, with the panel, with reading the knobs, understanding the lingo, the language, how things work and how things operate. But you want to move away from that as quickly as possible to at least executing one or two basic and real trades, because there's a lot of things that you won't learn from paper trading just because of our own natural human behavior. We'll get sloppy. We'll also be entering and exiting stocks that aren't necessarily the best of breed. So there's a lot of things you just can't learn. The emotions aren't going to be tied to a paper money or paper trading account. So all these things you need to learn to deal with. So if you're just getting started, you're trying to learn the panel, the platform, that's perfectly fine. As you start progressing and you start moving forward, you start getting comfortable with the software, you may want to start putting on a single share or 5 shares. Now, yes, I understand you may lose on commissions and it's going to cost you, but now you start learning about your own emotions. Now you start learning how to deal with these things, and then you can continue and increase your share count as you start entering and exiting at the appropriate times. You can always add a few zeros at the end of the number of shares that you're trading. So you can go ahead and continue progressing that way. But you got to learn how to deal with those emotions, with those stresses if you have any of them, or just that psychology factor, and that's part of paying for that education. It's part of learning that through that experience. After a little while, you'll continue to grow and you'll continue to increase your share count. And where you get comfortable, you can stick around that region and area. Now, you can, of course, always go back to paper trading if things aren't consistent, if you're not reading the markets right. If you want to try a new strategy or system, you can always go back to paper trading and see how it does for you. And if it works out, you can add it to what you're already doing. But remember that paper trading is just one step or a stepping stone to get to that next stage. And you've got to continue moving step by step. You've got to continue moving higher and higher to continue accelerating further in the future and towards your destination and towards your goals. If you just stay at paper trading for a long time, 2, 3, 5 years, and you never make one single trade, you won't really be able to progress further. So go ahead, start with paper trading, but remember, continue the progression, take action, move forward. The quicker you can implement things, speed of implementation, the faster you'll get to your destination, or the faster you'll progress in your life. All right, thanks for joining me in this video. If you found this video helpful, insightful, or you learned something, and you want to see some of my more in-depth video training, as well as some of the stocks that I have or am looking at for that week, then subscribe to my rapid recaps by clicking this link. And when you get there, enter your name and email address, and I'll send you an email when those are released, as well as getting some specials and promotions on some of the products when they come out. Now, if you want to continue hanging out on YouTube and watching some of the other shorter lessons and videos, then click one of these thumbnails right below this video. I'm Sasha Evdokov. Thanks again for joining me. Remember that there's more to life than just money. go out, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time.